Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, October the 23rd. The year's 2019. Let's talk trading. Trading part time. I've received numerous messages that go something like, um, I have a job and I can only trade, a certain hour of the day, or I can only trade 1 day a week because of my job. So, you know, tell me give me a system, tell me what system I should be trading. And you could probably hear me holding back the laughter. Um, First, you have to make a decision. Do you really want to trade? Um, Anything that you want to do is going to require time. And maybe you're not really in a position to trade because you have to work all the time. But forex market's pretty much open. It's open 5 days a week. It looks like 6 days a week, depending. If you live in the U.S. and depending on what time your broker opens. So you might be able to trade Sunday through Friday. Actually, point being is you have to decide when you can trade. If you're saying you can only trade 1 hour a day, well, then trade that 1 hour a day. You may or may not get an opportunity. Uh, I've compared trading to hunting and trapping and fishing. So, what you have to do is do the best you can with the resources available, time being one of the resources. So it doesn't really matter what system, either you're going to get a trigger from that system while you're in front of the screen or you're not. Or if you want to leave your trading platform open while you're away at work and you place your orders as limit orders or as buy stops and sell stops, and then maybe they trigger like a trap. That's why trappers, they check their traps every day. Sometimes they catch something, sometimes they don't. It would be pretty much the same thing with trading. But the main point is that don't expect more than what you put in. So if you only put in an hour a day or an hour a week or 1 day a week, don't expect a lot out of trading. You have to have some realistic expectations. Otherwise, it'll only end in frustration and maybe financial loss. And you will definitely have catastrophic financial loss if you don't employ money and risk management, which is something that we stress. And yesterday, I was showing how to look at whether or not you should enter a trade, and you just look at what the chart tells you. So, for example, here on dollar yen, we're looking at the daily chart, and you see right here it had made a lower low, but it didn't drop below this wick, didn't drop below that wick, it was in that upper wick. You can just see this. And so when it started coming back up, you could have jumped in the trade, and you can see it's pushed up pretty nicely. But of course, that's hindsight. But then again, if you entered the trade here, you could have put your stop loss, correct position size, and the worst thing that could have happened is you would have been stopped out. Now, remember, boys and girls, fellow traders, these videos are for educational purposes only, and your results may differ from mine. And always keep in mind that trading is very risky. You can lose all your money. And because of that, if you're looking for trading expertise and advice, seek it from an accredited financial professional. That way, when they lose your money, you know it was lost by an accredited financial professional rather than listening to some guy on YouTube or somewhere else on the internet. So for the week, if you're just tuning in, all the weekly gaps have filled. Dollar yen is still in the upper wick zone of the previous week. And you can see here, unless something happens over the next couple of trading days, it looks like we might have an inside bar on the weekly. 104 pips below the yearly open, 54 pips green on the month, and 18 pips green on the week, and 13 pips green on the day. You can see we barely exited the range of Monday's candle here. So far we almost look pretty much range bound. We barely exited there. We barely exited the upside previous day. So it looks like we're kind of stuck here. Something will have to give sooner or later, right? Some news event. And we're above these opens. And you can see where we are in the ranges above these actually above these highs here. And there's some lows that we're still below. We're in the inside bar for the daily from 5 days ago. So we might get another break there. And we already moved out of the monthly inside bar from last month. Obviously, the day is slow. There's no ranges over 100. I wonder what all the traders are waiting on. And we are in the upper wick zone of the previous day. You can see here we shot through the lower wick zone earlier, and that was good for about, looks like about 19 pips if you took that exit there. We're putting in a highest open this hour, H1 highest open here. So maybe look for a reversal. But it would probably behoove you to wait for this bar to close. Pivot, as I thought, would be within the buy zone. So no real bias. But given the fact that the daily open was above the weekly, you may have wanted to take a long bias, but hadn't even reached the buy zone. So you can see here we had a short trigger, just trading what you see. Should take profit. Should have taken profit during this candle. Second opportunity to take profit here. And if you took this candle on the short because it was red in this short zone, notice that it didn't make a lower low, started to reverse. Time to exit. Scratch trade should have been the worst case scenario. And trading across the weekly open, you can see it happened once and then twice here. And it's a nice move to the upside. $40 pip range, so the rat zones are right up against each other. And we did take out that weekly pivot. Took out the daily pivot. And actually hit R1 on the pivots. And you can see only one missed pivot this month, one missed pivot last month. Then you had to go all the way back to May to find some more missed pivots. And I'll just show you the weekly once again, there was a missed pivot last week. And you have to go all the way back to May for another missed pivot, and then all the way back to October of 2016. Price action, 3-ball at the bottom. And you look for green at the line, or knowing 3-ball here, price doesn't like staying between two lines. So you could have taken that trade back on that same candle, but that's only if you're good, because remember, your results may differ from mine. Wick zone, you can see in and out, and then back in and back out, and back into the upper wick zone. Just trading at horizontal lines, my favorite type of trade. Nothing esoteric or difficult, just a horizontal line, taking the trade with price in the direction it's moving across the line. At the tick level, you can see we're basically just churning about 2 to 3 pips, nothing much happening. Einstein line, pretty much the same. Nothing much happening here. And you can see the various wick zones are overlapping each other. And it looks almost like a chart on drugs. And if you're wondering, it's just 5 instances of TRO, HL5, showing the top, bottom, and high-low to create the wick zones for the daily, the weekly, and the monthly. So it is a work of art. You could probably take a picture of this and frame it, right? Put it in a museum, and people will contemplate the meaning and social significance of the black and white candles on the colored background. Okay, I know that's got nothing to do with trading. But seriously, you can see here's the opening range for the week, for the first day of the week, and you can see how price has been cutting back and forth across it. Taking note that price is taking the open, reaching the open, plus or minus about half of the minimum ATR. So you can see ATR 2 was the minimum as of today, and ATR 13 was the maximum. For those of you not familiar, my ATR lines indicator, since so many people, like to argue, do you use ATR 5? Do you use ATR 14? What I did was I created an indicator that basically does a loop from ATR 2 to ATR 14, and it figures out which has the minimum value, which has the maximum value, and then it plots the ranges. So we've got one for the daily and another instance for the weekly, and we can look and see the distance from the open in terms of ATR. Okay, and so you can see here price started at the open, went down about half the ATR2, a little bit further, and then it's turned around up ATR2. So between these two lines, it has traced the full ATR2, the full ATR2 value. For the week, the range is 48, and for the day, it's 41. So once again, it's just kind of churning and burning. Not much is happening. So something will probably happen soon. And just remember, fellow traders, it's not what you trade, It's how you trade it. So go out.